let's get you the Dabur numbers now. The Q2 PAT, profit after tax, came in at 340 crore rupees. Net sales came in about 2,090 crores, that's 2090. And but the worry has been on the cost front, which has been a little more than expected. Shell joins us with a quick wrap of how the numbers are stacking up for Dabur. Shell.
Right, so when you're looking at Dabur, overall, the numbers which have come in for the second quarter have been in line with what we were anticipating. For example, when you look at the revenue numbers, they've come in at 2,096 crore. We were estimating a number at 2,116 crore. So just 20 crore below our own estimates. The profit numbers come in above our estimates by almost 8 to 9 crore. So the profit numbers come in at 341 crore. We were anticipating a number close to 332 crore. So that's also pretty much in line. Margin improvement also was one of the things that we were anticipating, and this is largely on the back of lower raw material prices. Not just for Dabur, but even for other companies, a similar picture has panned out. Lower raw material prices have gone ahead and benefited the second quarter earnings. Raw material costs as a percentage of sales for this quarter have come in at 36% versus 41% in the same quarter last year. Segmentally, when you're looking at it, consumer care business, the revenues from that segment have gone up by 10%. At the same time, there's also been a margin improvement. Also, when you're looking at the revenues coming in from the foods business, they've gone up by 4%. Margins also increasing. They've come in at 16% versus 14.4%. So all in all, when you're looking at the second quarter for Dabur, it has been pretty much in line with what the street was anticipating.
Okay, thanks for that. But there has been a marginal increase in costs on the Q2 costs, and other income is also up marginally. Let's go across to Naveen Kulkarni, who joins us from Phillip Capital with a take on the numbers. Naveen, the stock hardly moving, but I'm going to ask you, what's your take on the first cut of Dabur numbers?
The numbers are in line with consensus estimates. They are, I would say, marginally below our estimates. So we were expecting the revenues to be about a percentage or higher than what they have reported. So the revenue growth at 8.7%, I would believe volume growth would be in the range of around 6%, pricing would be in the range of 3%. So they are in line with expectations, not significant positive surprise.
What is the urban-rural kind of cut for Dabur, Naveen? How big was a rural concern for this company?
See, urban versus rural, urban would be in the range of around 55% for Dabur and 45% exposure is to rural. See, rural has not been doing that badly for Dabur. So rural was not particularly a concern, but urban pickup had not happened to the extent that we would have liked. So that was a bit of a concern for a while now.
Okay. Well, costs have gone up slightly. Even the raw material costs have come down, and other income is also up about 41%. These are small numbers, but any take on that?
See, the costs are in line with expectations. I don't see that to be meaningfully different. Yeah, other income has been a little higher than our expectations, so that has helped the earnings. Otherwise, the earnings would have been a tad lower than what we would have.
Okay. Okay, we leave it there, Naveen. Thanks so much for joining us. Mr. Chokalingam joins us over here. Mr. Chokalingam, if you actually look at it over the last period, since the market started rebounding, it's consumer goods companies which have, consumer has been the theme for the markets. What are you making of the Dabur numbers and the FMCG pack on the whole?
No, the stress has spread to FMCG companies also. We have already seen, what I call single-digit growth syndrome happening to companies like HUL, even ITC. In that respect, a Dabur number is very impressive because, there are only two companies, Dabur and Godrej Consumer, which are able to grow the profit in double digit. Even if you adjust for other income spurt, it is still around 12-13% year-on-year growth in PAT, which is very impressive. But it's all in price because today it is very difficult to find a growth story. So the companies which show the growth stories, definitely they are valued at a substantial premium. So I would suggest to hold on to the stock. By any chance it corrects any around 5%, one can accumulate it.